Hello again, everyone. It's This Week in Agribusiness. Meteorologist Greg Solier. We're back in for Max Armstrong. Welcome to Farm Progress Dateline Drought. Our continuing coverage of the drought of 2012 is brought to you by Genuity Drought Guard Hybrids. Now, lots of folks have been approaching the weather guy of late and asking, Greg, are we in line for a white Christmas this year? Remember last winter season, or the lack thereof, record low percentage of the U.S. was covered in some sense of snow cover, which, of course, helps to define a white Christmas. Could very well in a fair amount of the heartland and in through the usual snow belt areas of the Great Lakes region go into this Christmas season in just about the same boat. Over the next 5 to 7 days, just not a whole lot showing up on the maps and charts to suggest that cold air is coming back into play. Perhaps that's good news from a comfort and outdoor work and livestock standpoint, nor anything regarding any widespread recurring moisture on the charts either. There's a couple of systems that appear, one over the course of the weekend for the Plains and Corn Belt, another one through the Ohio Valley and parts of the eastern states for next week. Over the next couple of weeks on This Week in Agribusiness, as we approach the new year as well, we'll take a look at the outlook for the winter season, what's left of it, and perhaps some thoughts too on the springtime season 2013. Certainly could bear some sense of interest with regard to maybe a subtle pattern shift and then a full-fledged pattern shift, that is, to organized precipitation over areas of the Great Plains and in through the Corn Belt. In the meantime, let's go ahead and take a look at how temperatures stack up as we wind down through these waning days and weeks of 2012, and no real cold air in sight. Approaching the Christmas holiday, temperature readings continuing above seasonal expectations from the Great Lakes region on through the southern plains. Readings over the next 6 to 10 days, for that matter, probably at almost record-setting levels on through some areas of the southern plains. So, again, from a temperature and certainly power consumption standpoint, can't complain about these readings whatsoever. Would like to see a little more hardening going on with regard to cold and the upcoming cold season and precipitation snowfall season too. But in the meantime, temperatures continue approaching Christmas about normal in the southeastern states. No sign of any early cold and or frost freeze concerns in through the Sunshine State. Readings just a few knocks below average Big Sky country in the areas of California. Meanwhile, moisture like this, well, maybe a little more interest beginning to come into picture here with regard to systems that'll come out of the southern plains and organize over the Ohio Valley. This is no doubt a trademark of El Nino. Plenty of moisture into areas of the west, and maybe with time teleconnecting these two with a pickup on moisture just beyond the New Year's holiday. We'll keep you posted, as they say. That's a check on weather. On to Bryce Knorr and a look at markets.
A weaker dollar is normally positive for commodities, but the lighter greenback didn't do much, if anything, to help the grain market today. Investors were selling dollars because they felt like taking more risk. The cause for that optimism came from the Federal Reserve, which concluded its last meeting of the year today. Not that the central bank was spreading cheer as the year ended. Rather, the Fed said the economy, and specifically jobs growth, are so weak that more monetary stimulus and low interest rates are needed to try to encourage growth. For the Fed, that amounts to $85 billion monthly to purchase securities off the market in the bid to drive up bond prices and keep interest rates low. In the past, these efforts at so-called quantitative easing poured money into various markets from stocks to commodities. But with the exception of petroleum, markets failed to respond in a friendly fashion today. Stocks ended the day lower, and even bond prices weakened, raising long-term interest rates, just the opposite of what was supposed to happen. As for the grain market, the Fed's move did nothing to turn around the bearish tide emanating from Tuesday's USDA report. To be sure, soybeans were able to overcome yesterday's bearish reversal lower, posting minor gains on the day. January futures ended a penny and a half higher at 14.73.5. Rumors of new sales to China helped support the market, but improving weather in South America was bearish. Traders expect weekly export sales reported Thursday to be good, topping 26 million bushels, but that's down significantly from last week's totals. Corn numbers are expected to improve to around 8 million bushels, but anything would be better than the last week's total of fewer than 2 million bushels of net new bookings. Still, corn fought back from break to new lows. Ethanol production in the latest week fell 11,000 barrels a day, but year-to-date demand remains above the rate forecast by USDA for the marketing year. March futures closed well off its lows, ending 2.5 lower at 725.5. Wheat again suffered the worst, falling to new post-harvest lows, even though the cheap dollar and falling ocean freight rates should make U.S. wheat, especially soft wheat, very competitive on world markets. Traders expect a decent week of export sales, around 16.5 million bushels, in line with USDA's new forecast for the marketing year from Tuesday's supply and demand report. Nonetheless, nearby weekly futures threaten to break the bull flag on their charts, though prices should recover on the roll to March at the end of the week. Chicago March ended down 9.5 to 812. Kansas City was off 16.25 to 865.25. And Minneapolis closed 7 lower at 904. Keep up with the drought situation across the country by visiting www.datelinedrought.com.